Afternoon. Am I audible? Am I audible?
Yes.
Okay. I just finished my morning mentorship session. I'll have some water and come back. How is everyone?
I'm fine. Hello. Yeah,
Nice to
Prashant.
know.
Hi.
Hi, sir. Hi.
I am orthopedic surgeon, Dr. Nishit.
Yes, yes.
I think lot of orthopod, I believe.
Yes, there are many orthopedic surgeons.
Yeah.
I'm also orthopedic surgeon working as a
I
shoulder
know. That's
specialist.
why I told you.
Yes, yes.
We met in ortho group also.
Yes, yes, yes.
Yeah. Wyckoff method almost 2 years back when we
Yes,
started.
yes.
Yeah.
This will be interactive session. We'll start in 3-4 minutes. So I will create a poll. How many of you are active traders or investors? Let me create that poll. So for active trader, I have given a definition that if you exit within 1 month after taking position, that will be active trader. 1 month to 6 month holding period is less active trader, and more than 6 months holding is trader. Sorry, investor. This is just random definition, just to know that holding period, whether it is less than 1 month, 1 to 6 months, or more than 6 months. Pool is publishing. You will be able to see the poll. Please answer that. If we have 18 votes till now, there are 26 participants. 7 more to go. Hardik sir says he is less active but wants to be active. We have 21 votes out of 32 participants. And most are in the category of 1 to 6 month holding period, less active. Active traders are 6 out of 23. Okay, so I will end the poll here. There 30 participants have answered out of 34, and I will share the results. Are you able to see the results?
हाँ बोल निकी.
Yes, Prashant, we are able to see.
So out of 30 people, 8 people are active traders who hold for less than 1 month. 16 people are less active. They hold for more than 1 to 6 month duration. And more than 6 month holding is for 6 people. That is good. Now, does anyone know what is ideal time period for which we should hold?
Depends on the kind of alpha you are trading.
Depends on type of alpha. Okay, I don't know what is alpha.
Alpha is your market edge. So, like if you are trading the hysteresis in vol, then you want to hold it for like a few weeks. If you are trading the delta scalp, then it is probably a few hours. And if you are like trading like the long term dispersion, then probably it's a few months, depending on what you are trading.
So depending upon what we want to trade and depending upon our view and
Yeah.
how the market is moving, everything will depend on that. How much is the best holding period? But if we are trading, and suppose we are trading on weekly time frame, daily time frame, 75-minute time frame, and 10-minute time frame. These are 4 common time frames. 75 is equal to hourly for some people, but I use 75 minutes because it gives us 5 candles of 75 minutes each in Indian markets, equity markets. For commodity, it will be 1 hour or 4 hours. So if somebody wants to trade out of these, most of the people who are holding for more than 1 month, so 1 to 6 months, those people who are holding for this period, they will be using weekly time frame, or ideally they should use weekly time frame because trades on weekly time frame can go on for 1 to 6 months, and sometimes it may go on for couple of years also. Monthly time frame is better for those who are using for investment purpose. So investors should always use weekly or monthly. They should not look for daily fluctuations. It will be very detrimental for their trading position. And those who are holding for maybe 2-3 days, they can use 15 minutes, just 2 or 3 days holding period. Those who are looking for less than 1 month, they can use 75 minutes or daily. So 75-minute time frame can give us trades for couple of weeks. Daily time frame can give us trade for couple of months, 1 to 2 months. That is the average time period. Dhiren Shah sir is saying he is not able to hear. Others, are you able to hear? Can others hear my voice?
Yes, sir. Yes, sir.
Yes, sir. Yes, sir.
So Dhiren sir, maybe it is at your end because others are able to hear. I'll see there are some comments. So less active investor but wants to be active. Okay. Now, does anyone know what is meaning of algorithm? Algorithm means automatic trading. But based on what? What is meaning of algorithm? Yes. So there has to be set of rules. So algorithm means basically rule. When we treat a patient, there has to be a specific rule that when patient is suffering from so and so condition, then there will be this protocol which we need to follow. That is the set of rules which we create for treating patient. Similarly, algorithm is a protocol created to initiate trades and exit trades. So that is algorithm. When we follow rules, whether it is based on automatically traded artificial intelligence, there are trading bots that can be called as algorithm, or if we have created our own rules and we use those rules, that can be also algo trading if we follow all the rules all the time. But how do we know what are the results of that algo trading? Can anyone tell me? How can we get whether this trading will be successful or not? Back testing. Yes. What is the best way to do back testing? I have two monitors. I will be looking on sides. The second monitor. Okay, what are best protocol? What is best thing? How can we do back testing in better way with coding or manual back testing? So there is manual back testing or with help of coding. If we do manual back testing, we learn lot of things. But there is one possibility of having a bias. We may look only successful trades and we may avoid unsuccessful trades. Those trades which are giving us losses, we may say that probably I will not take a trade in this. But with coding, this bias is not seen. With coding, we will have to take all the trades and it will give result if we follow rules in each case. Right? And coding is possible with multiple platforms. For coding, there is TradingView. TradingView has Pine script language. Then there is Python language. I don't know if Python can give backtest results, but Python definitely is useful for coding and trading. Then there are various other platforms, maybe Ami Broker, it gives coding. I don't know whether it gives backtesting results or not, but I use TradingView. TradingView has very nice and beautiful backtesting as well as execution platform. So let me share my screen. Is this chart visible?
Yes.
This is naked price action chart. There is no indicator on this. And looking at this, we may feel that if I buy at this level, many people fancy their chances of buying at this level and selling here. But it's not possible. But what is possible? It may be possible to buy here and exit somewhere here. That is possible, and even that may give us profits. or it can also be possible to sell here and exit somewhere here. That is also possible. But we cannot sell at this top and we cannot book profit at this top, this bottom. Now, there are multiple indicators which can be used, and there are super trend and whatnot. Let me add super trend. It looks very beautiful. This is super trend indicator. Now, this indicator is showing that this is a level to sell. Okay. So, if we check the chart, it looks very nice. It shows us that there was down move, and from here to here, it fell very nicely. But actually, the entry point will be at this level. When this candle closes, that is the entry point, and exit point is in this candle close. So when we check this chart, we see this is our entry and this is our exit. That is not the case. Our entry will be at this high and exit will be at this level. So total profit in this trade is not from this low to this high. It is actually from this close to this close. When we do manual testing or whenever we do anything, this is weekly chart. Let me make it daily. So we can see there are multiple up and down moves. There are some trending down moves. So this is nice trending down move. It will show big profit. It will show big profit. And we will be fascinated with this, that this is showing big profit. But if we are not able to sell in this trade, if we are not able to sell here, if we are not able to sell here, then these trades will be missed. We have to take all the trades. Let me show you what is the result of this. There are many super trend indicators available, super trend strategies available. This is very frequently given as common strategy. So this is a super trend strategy. It is freely available on TradingView. If we go to Bank Nifty, let us see what is it showing. It is showing profit, 38 close trades, 47% success rate, and profit factor. So we are going to discuss multiple things in this. And this is freely available on TradingView. How to analyze this? We can see this is a buy, this is a sell signal. So we can we'll feel that we will buy at this level and we'll sell at this level. And there will be very nice profit. But actual buy signal is in this blue arrow, blue horizontal triangle. So that is a level where we are going to buy. And this is a level where we are going to sell. And this strategy is stop and reverse. That means whenever stop loss is hit, we have to exit previous trade and take new trade. If you see, there is -2, +2, -2, +2 everywhere. Here we have +2, here -2. This is trading with one contract. So initially, when we go to start of this, there will be just one contract. I will show you from strategy tester list of trades. If you see, contracts are one everywhere, but on chart it shows two because there is one exit and new fresh entry. When we go to this first entry, we'll see this is first trade in whole back testing. So we can see there is -1. After that, there are two contracts. Okay, this is -1 means this is first sell entry. Then after this first sell entry, this is the entry and this is the exit. So there is profit in this trade. Then second trade was taken from -1 to +2. So one buying position has been created. If we buy here, stop is hit here and exit is made here. So even though there is from here to here, there is nice up move, our actual profit here is just 400 points, right? It's not from this bottom to this top. It is 400 points. points from this horizontal line to this horizontal. This is one thing which is important. Now I will show you in strategy tester. There is overview. In overview, we can see how much is net profit, total number of trade, percentage profitable, profit factor, drawdown. So here net profit is 11,000, but maximum drawdown is 10,000. To make 11,000 profit, we have to see 10,000 rupees losses. So losses seen in this indicator are almost similar to profits. Profit percent is 47%. So 47% trades will be profitable and 53% trades will be loss making. But as losing trades will be less, they will lose less money. This is still showing profit. Now there is one catch here. There is no commission added. Commission is 0 in this. And order size is 1. So suppose we take trades with 4 lots. 4 lot means 60 size. That is 4 lots. It will take around 4 to 5 lakh rupees capital. For that capital, if we see net profit is 6 lakh rupees and maximum drawdown is 6 lakh 13,000. So to make 6 lakh rupees, we may lose 6 lakh rupees as well from capital of 5 lakhs, which is used for 4 lots. So 5 lakh capital will definitely not be useful capital. And here we have a lot of drawdown in this strategy. So here, if there is drawdown, we may not use it further. Now the catch which I was telling is there is no commission added here. And there can be big slippages. There will be commissions required. Commission means brokerage, taxes. Does anyone know how much is tax required? Tax per lot? How much do we pay?
0.1,
0.5.
0.5. Okay.
No. Somebody has answered 0.5. Yes, Sujit sir, how much?
It is 0.1 generally.
0.1 generally. Okay, let us first calculate. So this is futures as we are taking bank nifty trade. This is futures. Suppose we are buying at 42,000, selling at 42,000. Quantity is 4 lots, 60 quantity. Net profit and loss is 537. Means we are paying 537 rupees charges. If we take one lot, it will be around 170 rupees. Right?
I think ये चिपक गया है.
Sorry, just a
We-
minute. Let me share my screen. Are you able to see the screen?
Intraday equity.
So in this future and option, futures.
Yeah.
Buy 42, sell 42, quantity 15. Net profit and loss is 170 rupees. That means we are paying 170 rupees for this trade as exchange transaction charge, STT, brokerage, and GST and all other charges. So brokerage is 40 rupees and everything is remaining 130 rupees. If here we increase quantity to 150, brokerage will remain same. It will remain 40. Everything else will increase. So it will be 1,273 rupees. For 4 lots, it is around 537 rupees. Okay. Turnover is approximately 50 lakh rupees. For 50 lakh rupees, how much is net charge?
534.
How much is the percentage? It is probably 0.01%. Let me show you on calculator. 537 divided by 50 lakh multiplied by 100. It is 0.0001. 0.1%, right? 0.01%. Yeah. So that is our 0.01% expenses here, right? Are you getting this calculation? For turnover of 50 lakh rupees, we are paying 537 rupees. So it is 0.01% of our total turnover. And there will be some slippage as well. So when we buy at market order, it will not buy at 42,000. It will buy at some probably 10 rupees higher level. And when we want to sell, it may sell at maybe 10 rupees lower level. And that will increase our cost because of slippage. Can you see the difference? 1200 rupees is going in slippage. And if the commission is zero, we will not get actual return, net profit or net loss. It will not be possible to understand. When we add commission, I will add 0.05. So Divesh sir wants me to repeat slippage part. Okay. Let me show you. So this is a bank nifty chart. Suppose we want to buy. We want to buy when this candle closes and we place buy at market order. If you see this open, this is opening at 4 rupees higher level. So this is 4 rupees 20 paise. If we see here from close to next candle, there is 5 rupees difference.
Huh?
If we see here, this is the close of this candle, this is open of next candle. There is difference of 16 rupees 75 paise. So if we place buy order at this level on candle close, our execution will happen 16 rupees lower. It will not happen at this level. So if we want to sell, it will be sold at lower level. So this is called as slippage. When we want to buy, sometimes it may give us advantage, sometimes it may give us losses. So most of the times, if you see in Bank Nifty, there are 10 to 20 points of slippages. I'm calculating just 10 points. And most of the times it is 4-5 points. I'm taking 10 points. Suppose somebody enters with 100 lots, that will have more slippage. Somebody enters with 2 lots, it will have less slippage. Slippage means the difference between price level at which we want to enter at market and the execution price. Okay. And just 1 minute. Here we were checking commissions. Commission I have entered 0.05. Actually, the slippage is the commission is 0.01. But as there can be a slippage, I am adding 0.05%. After adding that, we have to see how is the result for that strategy. The strategy is still showing 44.74% returns for profitable trades, and it shows 6 lakh rupees profit, 6,27,000 losses. So net profit is less than maximum drawdown. This is one bad thing. Then in performance, we can check how much is the taxes paid, commission paid. Commissions paid are 75,000. Total number of trades are very less. This is a daily chart. And we'll see this thing. The returns, that is one thing. But most important is duration for that return. So this is from 2018. This is showing returns from 2018. From 2018, there are almost 40 trades, and it has given profit of 6 lakh rupees. Actual capital required for this, for trading 4 lots, how much will it be? It will be approximately 4 to 5 lakhs, 5 lakh rupees. But if we trade with 5 lakh rupees and there is drawdown, will it be possible to take trades furthermore? Even if there is more than 1 lakh rupee drawdown, can anyone continue holding when there is 20% loss of capital? Is it possible? It is not.
No, it's not
So,
possible.
yes. So if we want to trade with this strategy where drawdown is almost 6 lakh rupees and profit is almost 6 lakh rupees, then we must have minimum of 30 lakh rupees as our capital. If we have 30 lakh rupees capital and we trade with 4 lots, then maximum drawdown of 6 lakhs will be 5% of drawdown on capital of 30 lakhs. Right? Am I right? So Hitendra sir said yes. So even if we want to risk 20% of our capital, even if we want to risk 20% of capital, we have to take this 6 lakh drawdown will be on 30 lakh. That will be 20%. So 30 lakh rupees will be required and we can sustain drawdown of 20% and profit will be 20%. So on our risk of 20%, we are making 20% on capital of 30 lakh. How much duration is required for this? It requires 5 years. And you see it is from September 2018 till now. In last 5 years, this strategy on daily time frame has given us 6 lakh rupees of return. And if we use 30 lakh capital, then with 20% of drawdown, we will be able to make 20 lakh rupees, 20% profit. So in 5%, it will give just 20% return. If we consider just 5 lakh rupees, then it has given more than 100%. But then drawdown will be much larger and we will not be able to hold on. Here we can see there is one trade which has given loss of 1,20,000. Profit of 4 trades is gone with just one trade. In performance summary, we have to see what is largest winning trade, what is largest losing trade. Largest winning trade was 5,73,000, whereas largest losing trade was 2,28,000. Can we sustain a loss of 2,20,000 on capital of 5 lakh? It's not possible.
No, not possible. Almost 45%.
Yes. So if our capital is 20 lakh, 30 lakh, then it is means sometimes it is okay. If somebody has big heart and big capital, then this will not be a big loss. But as compared to losing trade, how much are we making? Almost 2 times. Overall, after 47% success rate, it is still producing profit, but largest losing trade is much larger and largest winning trade is also very big. So it may not be also possible to hold on to make this profit of 5,73,000. If somebody has capital of 5 lakh, he will not be able to hold on to exit at 5 lakh capital profit. They may exit at just 10,000, 20,000, or maybe at the most 50,000, 1 lakh. So this shows us that when we follow a strategy, we should calculate the largest winning trade, largest losing trade, and understand whether we can sustain that kind of large losses. Large profits are okay. If it is in profit, we should hold on, but we should not hold on to large losses. Now, this is just 20% return on in 5 years. So we are not going to trade for that. Let us go to time frame which is lower, because if we go to higher time frame, it will give less profit, less number of trades, and it will give us less profit. So if we go to 75-minute trade and check the performance, overall there is profit of 4,71,000. Maximum drawdown is almost 7 lakh. So here also we are making much deeper losses. Number of trades are much more. If I remove the commission, it will change the equation. It shows 8 lakh rupees 57,000 profit, whereas maximum drawdown is 6 lakh. But if I add commission, many people will not show you this after adding commission. They will show without commissions. And they will say commissions are very small. It will not bother you. But this is the reality. It will reduce your profit by big margin and maximum drawdown will also increase. Profit factor is 1 rupee, 10 paisa. So profit factor means how much we are making for every 1 rupee loss. We are making just 1 rupee 10 paisa. There is success rate of 35% and overall there is a profit, but maximum drawdown will not let us continue our trade. And if I want to show you that this strategy is very good, what I can do, I can start from this trade number 140. List of trades. So this is trade number 140, starts from January 2020. I'll go to deep back testing and I'll show you from January 2020. There are just 99 trades in that. And if we see performance overview, it has gone up very nicely. Still, there was some drawdown here, but it looks better. I don't understand. Something is wrong here. But there is still maximum drawdown is 6 lakh 90 rupees, 90,000. We go to this trade. Let us check that date. List of trades. From here, we'll check from this date. Okay. From 14th of December 2020. We go to December. And generate. So we have less number of trades here and it is all in green. So it is very easy to manipulate things and show you that this strategy has never given a loss. It has always been in profit. And net profit is 5 lakh 44. Maximum drawdown is 2 lakh 68. Even in this situation, if I add commission, even in that case, it is showing nice profits. Right? So we should understand actual background. This is for last probably 5 years from 2018. So this is also for 5 years. And on 5 years on 75-minute time frame, it has given almost 200 trades, but profit is negligible and drawdown was very large. Now, if we go to 15-minute time frame, again we can see what is the result. The result shows 7,33,000 profit, 7,53,000 drawdown. So here profits are much larger as compared to profits for 75-minute or daily time frame. 15-minute time frame is showing much larger profit. How many number of trades? There are 543 trades. Now, if I remove commission in this, it will show much bigger profit. See, it shows 19 lakh rupees profit. Drawdown is just 4 lakh rupees. Will you be impressed with this number? Capital required is just 5 lakh rupees. Even if you use 10 lakh rupees, 50% will be drawdown. Here you don't have any losses. There is always a profit, and 19 lakhs was profit. And how much is the duration for this? Let us check. First trade is 2020, August. In 3 years. In 3 years, it is giving profit of 194% on capital of 10 lakh rupees. So in 3 years, you are making 200%. But when we add commission and when we add slippages, it comes down drastically. And drawdown is increasing drastically. Right? So if there is 7 lakh rupees drawdown, how much should be capital? It should be at least 5 times of this capital. This drawdown. Or capital should be at least 5 times. And we can deploy it in multiple different stocks. Maybe we can use 2 or 3 strategies and deploy that capital. But total capital should be large to sustain that kind of losses. Right? So it is not about this particular strategy. Prashant sir, I am discussing overall how to analyze results of a algo trade. Results of algo, how to analyze this. Now let me show you results of my algo which I have developed. So this is result for 1 minute. This is strategy tester. If you see, time frame is 1 minute, and this is a result for 1 minute time frame. Total 118 trades, and all have given us big losses. If we go to 3 minute, it will still give losses in 3 minutes. In 5 minutes, what will happen? It will still give losses in 5 minutes. So all these time frames, 1 minute, 3 minutes, 5 minutes, all are for intraday time frames. And this is a time frame of 15 minutes. Now 15-minute time frame is giving us profit. And profit is almost 10 lakh rupees. I will show you how much is commission added for this. It is 0.05%. If I show you without any commissions, it will give much more. And drawdown is less here. So if I add commission, you see drawdown for this strategy is almost 2 lakh rupees. Yeah, 2 lakh rupees drawdown. Net profit is almost 9 lakh 83, 10 lakh rupees. So for to sustain 2 lakh rupees of drawdown, this is with this is not with any lot size. This is for risk. So number of contracts will vary every time. There are 25, 125, 50 lots. This is considered for 25 quantity. Order size, and this is the lot size. If I make it 15, result will change. So if we trade with 15 lot, the result is 10 lakh net profit, 2,17,000 net loss drawdown. To sustain this, we must have minimum of 10 lakh rupees. Now, if we see success rate, it is just 37%. But profit factor is much larger here. And this is very important. Average bars in trades, it is 36. For 15-minute candle, 36 bars means how many days? In one day, there are 25 candles of 15 minutes. So it is almost 1.5 days. If we go to performance summary, we'll be able to see many things. So here net profit is almost 10 lakh rupees. Gross profit was 22 lakhs. Out of that, there is commission of 3 lakh 87. On short side, it has not given any profit. On long side, it has given all the profit. But there will be some market condition when short side will give more profit, long side will not give profit. And there will be some market condition when both sides will be giving profit. The gross loss from this profit was 12 lakhs and maximum run up was by 14 lakh rupees. So let us go to important numbers. If we just buy and hold, the return from first trade is 2,25,000. First trade was 3 years ago. This is June 2021. That is the date of first trade. From that trade, if we invest our 10 lakh capital, return will be 2,25,000. But with strategy, it is 10,38,000. And how much is average profit? Average trade gives 8,000 profit. Means even though there are more losses and more less profitable trades, with just 37% success rate, it is giving 8 lakh rupees of 8,000 rupees per trade profit. And reason for that is average winning trade is giving much more than average losing trade. Average winning trade is giving us 48,000. Average losing trade is giving just loss of 15,000. And maximum losing trade, largest losing trade has loss of 32,000 rupees here. Whereas largest winning trade has 1,84,000 profit. So why is this 32,000 rupees maximum losing trade? Can you mute? What is that? Okay. So this is largest losing trade, which is just giving us 32,000 rupees loss. If we have a capital of 10 lakh rupees, can we sustain a loss of 32,000? Yes, it will be possible to sustain that loss. And I will show you why the loss is less. If you see this, I have defined my capital here. It is 10 lakh rupees and risk is defined. It is 20%, 2% of capital, 20,000 rupees. So my maximum risk is 20,000. But sometimes as the trade is overnight trade, sometimes there may be gap up or gap down against our entry, and that may give us more loss. But still maximum loss is just 32,000. Even though we have defined 20,000 as our maximum loss, maximum risk, position size will be taken as per that. And if we see average losses, they are less 15,000. So average loss is less than our anticipated loss. And average winning trade is giving 3 times of average losing trade. So that is the reason, even with 37% success rate, this setup is giving good profit at end of 3 years. Now, if we see in this bars in losing trades, there are 18 bars in losing trades and there are 65 bars in winning trades. What does that mean?
Days of profit and
So
less than
this is, we should
2.1
let
days
the
of
profit run and cut the losses short soon. If we don't cut the losses soon, then it can go on increasing. In other strategy, let us see what was the number of average days. So here winning trade is for 59 days, losing trade is for 24 days. The difference is much less. Here we have bigger difference. Almost 3.5 times number of bars are almost 3.5 times than losing bars. So whenever there is a loss, the trade ends sooner. But when there is profit, it keeps on going on. This is because of trend following method. When the method is for trend following, it will continue to give us profit. If it is not for trend following, then it can run anywhere. But when we are following a trend, it will go on to give us profit and number of bars will keep on increasing. If it goes against us, number of bars will be less and we should exit at smaller losses. Only then our maximum loss will be small and our average losses will be smaller. Okay. Any question on this?
What is the actual strategy? Like, how do you decide entry
Yes, I
point?
will come to that. I will come to that. But first, all
This
these
is
points are very important to understand.
okay. So this is like you are giving us idea like how profitable and safe this strategy is.
Means how we should analyze our strategy, whether it should be profitable or not. If we are following some method, how it will be profitable, how we can let the profits run, and how it can give us profits. We are
Okay.
discussing these things. And once we make the mindset, appropriate mindset, only then we can hold on to our trades. Now, if we see, this has given losses for almost 17 consecutive trades initially, from trade number 1 to trade number 17. There are losses of almost 2 lakh rupees. Okay, this is cumulative profit of minus 2 lakhs, means there is loss of 2 lakh rupees. But just one good trade and it has erased all the losses. It is profit of 1,84,000, which has removed all the losses. And from then it came in profit with another big profit. And then it has stayed in profit continuously. So if we have a strategy which is proven, this is just 37% success rate strategy. So there are conditions when there can be back-to-back losing trades. Many losing trades may come. Here we have 4 back-to-back losing trades, just one small profitable trade. Then again 3 back-to-back losing trades. So when the success rate is smaller, even though ultimately it is giving profit, it may be sometimes difficult to hold on to this strategy. So these are very important learning points. Now let me show you some entry point, and at that point I will show you what is the strategy. Yes. So this is a entry point. This is long entry. And if you see, there are multiple factors here, right? I will show you with bar replay. When all these boxes are green, at that time, it will execute the trade. When it is bar replay, this signal will be late. In actual trades, it will be on time. So this is our entry point. Entry happens after candle close at open of next candle. So even though it is showing entry here, actual entry will happen here. That is the level shown on this triangle, horizontal triangle. So buy will be at 45,608 rupees 75 paise. If we go to strategy tester, $45,610. So open, it has shown us around this level, right? So that is the entry level where our entry will happen on candle close. So candle close entry means entry will happen on next candle's open. Okay. Criteria for this is, if you see, this is a Bollinger Band. Yes. Do you know Bollinger Bands? So this is a Bollinger Band and these are pivot points. So price movement above moving average, there is a moving average, then pivot point, whether weekly or daily or monthly, which one do you want to use? There are multiple inputs I have taken. So I will show you this. If I remove this, the table will not come. I have to enable the table. Then I can, with this, I can only take long trades. I can only take short trades. It is possible to take long entry only, short entry only. Then I have created these trade windows. So using this trade windows, if suppose I write 9 a.m. here, 9:15, and I want to enter before 10 o'clock. So it will show entries if they happen only within this time frame, if I select this window. Otherwise, if entries after that time, it will not create entry. And if I want to exit intraday, then I have to select this and it will exit the strategy intraday at 3 o'clock. Whatever time I write here, it will exit in next candle's opens. Then there are trade days, Monday, Tuesday, Wednesday, Thursday, Friday. I can select any number of combination and I will be able to understand what happens if I trade only on Monday, if I trade only on Tuesday. I can show all those results also. So these are miscellaneous things. Main thing is here. How much is capital? How much is risk? On capital, if I want to take risk of 20,000 and I use calculated quantity, then it will show result with calculated quantity. If I want to use fixed quantity and enter 60, then it will show result with 60 quantities only. It will change that. And order bucket size. So if the lot size is 15, I will enter lot size of 50. Now, in this strategy, let me show the chart. And this is the first parameter. First parameter is candle, stop loss candle look back. So stop loss candle look back. What is meaning of that? If this is my entry candle, where will I keep my stop loss? Look back period mentioned is 6. So if I keep my stop loss below 6 candles low, this is 1 candle, 2 candle, 3, 4, 5, 6. Stop loss will come below this low. Whatever is lowest, suppose it is like this, up down move. So whatever is lowest low, below that there will be stop loss. So this is one criteria for deciding stop loss. If I have decided that as my stop loss, this is my stop loss. How much is stop loss? It is 300 points. And my risk is 20,000 scales. So does it fit in my risk? If there is 200-point risk and I take position with 100 quantity, the amount I lose will be 30,000. It will not fit in my risk criteria. So if I keep my lot size is order size to 60, 300, that will be 18,000. It fits in my it fits in my risk criteria. I will be able to trade with 60 quantity. So this is how position size will be calculated, and it will be calculated automatically using stop loss. This will be stop loss. This is entry. How much is the risk? Accordingly, for risk of 20,000, it will calculate position size and it will immediately take a trade. So stop loss is first thing which I want to decide. I have shown you how will I keep stop loss. Then I will come to other criteria. So have you understood about stop loss and position sizing? Okay. Then there is target one multiplier. So for target one multiplier, I have kept as it as 9. And partial book percent is kept at 100%. What is the meaning of this? Can anyone tell?
When there is 100% profit, you will book partially.
So partial book percent 100 means exit will be with 100% quantity. Target multiplier is 9. I'm exiting 100% quantity. I'm not exiting partial quantity. And when there is risk to reward of 9 achieved, at that time I will exit 100%. Means if I'm risking 10 rupees and I'm getting 90 rupees of profit, at that time I will exit complete quantity. That is the rule here, which I have entered. Okay. Any doubt? I am getting 1:9 risk to reward. When this is achieved, I will exit. Another exit criteria is if I there will be trailing stop loss. If that trailing stop loss is hit, I will exit. And criteria of trailing stop loss is if candle closes below this central Bollinger Band, then I will exit. If candle crosses below lower Bollinger Band, then I will exit. I will not wait for close. So there will be two stops for trailing. Either candle closes below this or it crosses below lower Bollinger Band. Okay. Now, this is length of moving average, which I can use for exit. If I apply this rule, then it will change the results. I have not applied that rule, so it will not show result with this. But if I apply this rule and suppose I use 20 moving average and source is candle close for exit. Whenever candle closes below 20 moving average, it will exit. Okay. Then there is moving average setup. So if I enable trade entry plot on or off, now this has enabled and it has plotted that moving average. Moving average used here is 75. If I unselect it, just moving average will not appear, but trade is based on that. If this candle closes above 75 period moving average, only then long entry will be initiated. If this signal is generated below 75 moving average, then this trade will not happen. Even though there is Bollinger Band breakout, it will not initiate a trade. So this is one criteria for this. Then second criteria is choose pivot point. When I'm choosing weekly, it will select weekly pivot point. And if this closes above weekly pivot, only then it will initiate long entry. If I select daily, then it will take daily, and if entry is above daily, then only it will take entry. Here we can see it has closed above daily pivot, so it is taking entry. If I use weekly, monthly, then it will take entry if candle is closing above monthly. Otherwise, it will not create entry. So for this, I have used weekly. Then there is this Bollinger Band for which length is 52, candle source is candle close, and standard deviation used is 1.1. Now, how these figures have come? I have done testing. What gives best result? This same setting will not give same result on Nifty, but Nifty result will vary. It may be loss making, it may be profit making. So length of Bollinger Band, it came with back testing. I have done this back testing 1 year ago. At that time also this was profitable, and even now it is profitable. So this can be, this needs to be tested. We cannot test this manually. It will be very difficult to plot 51 minute, 51 period Bollinger Band, 52 Bollinger Band with all these different criteria of weekly, then moving average length, all these things. It will be really difficult. And standard deviation 1.1. So if I show you results, let me show you results again, strategy tester. It is showing us result of 10,45,000. And I will show you change in result with change in standard deviation. There is significant difference. If you can appreciate, there is difference of more than 1,20,000 with just small change. Bollinger Band standard deviation from 1 to 1.1. If I change that, it changes the result. It is 10,45,000. So it is increasing by more than 1,60,000 just with one standard deviation, 0.1 difference. Now this is based on price action, and here what I am doing is I am using body range of last candles, and if there is increase in body range, only then I will take a trade. So if last 5 candle or last, I have added 4 candles here. So if current candle is 1.1 times larger than previous 4 candles average spread, only then buy entry will be triggered. If this breakout candle above Bollinger Band is small, something like this, here also all the criteria are fulfilled, here also all criteria are fulfilled, but it is not fulfilling the criteria of spread, then it will not take any trade. And there is one more criteria, last criteria, that is close in upper 70%. So for this, I have used close in upper 70%. If this is bullish candle, which is closing in upper 70%, only then long entry will be created. Suppose I mention instead of 0.7, if I mention 100%. So if candle closes at top, only then it will initiate a trade. Now it is not taking a trade. You see, this candle has a wick at top. Therefore, buy signal has disappeared. But if I make it 0.7, it will take a trade. Even with 0.9, it will take a trade. See, long entry has appeared here. So this way, there are multiple factors. In this algo, I have used Bollinger Band, moving average, pivot point, candle spread, and breakout. And one more criteria. The one more criteria is there should be at least 2 candles which are closing inside the Bollinger Band. If these 2 candles are not closing inside the Bollinger Band, then entry will not trigger. And volume in this buying candle should be larger. So that is 6th condition, volume condition. And that candle consolidation condition is not mentioned here because it is applicable to all. It is not variable. Therefore, it is not mentioned here. So price, if it is above moving average, if it is above pivot point can be changed, moving average can be changed, Bollinger buy condition can be changed, volume condition should be true, range of last candle spread, that should be true, and closing in upper 70-80%, whatever we choose, that should be true. When all these criteria are fulfilled, only then this trade will be initiated. Is it possible for us to manually check all these criteria and then take a trade? Can anyone do it?
No, sir.
Especially on 15-minute time frame?
No, sir.
So this is why I have built this. I wanted to see what are the results of strategies and which time frames they give better results. So my experience is 15-minute time frames give best results because number of trades are larger and we get good profits in shorter duration. Losses are limited, they are not very big. If we check 75-minute time frame or daily time frame, the losses can also be big and they are not sustainable losses. And 15-minute time frame trades, they last just for 1 or 2 days. Sometimes it may be 3 days, 4 days. If we check this result, strategy tester performance, there are 65 candles. So how many days will it last? On an average, 65 candle means there will be 25 candles. There will be 25 candles in 1 day. So it will be 2.5 days. So 2.5 days means on 3rd day it will exit. So it may be 3rd day from entry or 4th day from entry. If we enter at last candle of entry day and exit on initial candles, it will be 4th day. So at the most, it will be 3 to 4 days maximum. When we are not maximum, on an average, it will be 3 to 4 days. So if we want to trade on shorter time frames, we can trade those kind of trades. Recently, if you have seen, I exited KIOCL in 2 days. I exited FACT in 3-4 days. So this is the reason why exit in 3-4 days, because from this backtesting, I have understood that profitable trades are best when they are on 15 minutes. I trade them as per daily time frame, but they can give maximum profit in 3 to 4 days, 2, 3, 4, at the most 5 days. That is average. Within that time frame, if we get our target, just exit, and from that there may be some consolidation, after which we may get fresh entry. So there are many things which we learn from using and analyzing these algos. We will understand that there will not be profitable trades all the time. There can be some back-to-back losing trades, like here 1, 2, 3, 4. There are 4 back-to-back losing trades. But if the system is proven for 100 tests, 100 trades, then we should stick to that system and we should continue taking trades. Limit the risk which you can sustain. Keep your capital enough to sustain the maximum drawdowns. That is the key. Okay. Doubts or questions? This is just one simple algo which I have built on multiple indicators. I can show you one more which is based on moving averages. Even moving average can be a good strategy. So I have built all these scripts. There are multiple screeners and some strategies. This is a strategy based on triple moving averages. Here it is, top and reverse kind of trading. Order size, I will make it 60. And if I show you without commissions, something like that. It is not taking 60 size. Let us stick with 1 and multiply the results with 60. So it is giving, for one quantity, it's giving 13,000. But instead of having zero commission, if we add just 0.01, which is the brokerage, it is reducing the profit. And if we add some slippages, 0.05, it is giving very small profit. And there are multiple things which can be changed. Here we have inputs. EMA used is 5 moving average, 15 and 90. Same setting will not work for all the stocks. And if we change this setting, the results will change. Suppose I make it 70, 21. Just 2 moving average crossover. Initially it was 3 moving averages, but I have made second and third same, so it is showing a result for 2 moving averages. Even this even with commissions, this simple strategy is showing profit on 15 minutes. But how is the percent profitable? It is just 30%. Means out of 10 trades, there will be only 3 trades which will be profitable. There will be 7 trades which will give losses. And how much is drawdown? There is 7,000 rupees drawdown. Main thing is, if you see the difference, largest losing trade is just 8,000 rupees, 800 rupees, and winning trade is almost 4,000. So this is almost 5,000 of maximum loss. And if we check average losing and average winning, this is 2.5 times. So average winning trade is 2.5 times as compared to average losing. This indicates that if we have buy signal here and there is no signal here for selling, we should hold on. As long as there is no signal, we should hold on. We should not change our routes. Or else if the candle is closing below this and we exit, we'll miss this opportunity to make big profits. So whatever the rules are, stick to them. Don't change them arbitrarily. Arbitrarily, if we change the rules every time, there will not be any sustainable profit and we will not be able to analyze the method properly. When we have fixed set of rules, we can analyze the system and we can decide if I can take this setup or not. But if we don't have any fixed rules, then we cannot analyze and we cannot take any trades. See, there was this short signal from there. It has given very nice profit. But if we feel that in earlier the short trade has not given profit, so we'll not take this trade. We'll miss this. Method means system means we have to take all the trades. Then there is discretionary system where we decide independently whether I want to take this trade at this level or I will take buying trades only when there is some accumulation. After that, I will look for buying opportunities. So I prefer discretionary method. I do not use this method of fixed set of rules. For me, discretionary method gives much better profit. And discretionary method does not mean there are no rules. There are rules for everything, even in discretionary method. If we don't follow those rules, then it will be useless trading. If we follow rules, even with discretionary system, it will work like system trading. My rules are like, I will buy only after confirmation of spring. And after that, when there is secondary test or breakout after that, only then I will look for buying opportunity. Or other will be if I have intermediate uptrend, only then I will look for buying opportunities. Before that, I will not look for buying opportunities. You can decide what are your rules. Does anyone wants to test this two strategies, moving average crossover and multiple, this one with multiple indicators? If you want, you can message me your TradingView ID. Or I will share link for this. You can comment in that link so that I can give you access. Okay.
TradingView we have to download, but it's very expensive.
TradingView, it's free.
Okay, I don't know because
It is free.
I had TradingView, but now it's asked for there is no free in that. Maybe I have to change email.
Let me see, because I am using paid version, but it is available free of cost.
It is a very short period, I believe.
Sir, it is free.
See, I have not upgraded this. This is non-professional and there is fees if we want to subscribe. This is 48,000 for premium, 12,000 rupees per year for essential. I use this one, premium account. I use premium account, but it is also freely available. And this is very expensive. Professional one is very expensive. Non-professional is still okay. And here I have not subscribed because I can see it is asking me to upgrade. If I go to charts, this is another account which I am showing you. I'm able to open the chart. I'm able to apply these indicators. There will be some limitations. I will not be able to apply more than 3 indicators.
So now it is 2 indicators.
Okay, that will show. Yeah. So this is the screen. If I'm using basic, which is current plan, only 2 indicators can be used. I'm using premium one. I don't need professional. But for basic, we can use some indicators are still available. It is still possible to use basic one. And there will be some alerts also. I can use 5 alerts on price. Technical indicators will be 1. I can use 1 technical indicator on some strategy or on some indicator or trend line. And for price, I can use 5 alerts. But if I want to execute trade from trading view, I need paid version. For basic understanding and for learning purpose, free version is all right. You can always have multiple charts open and you can add different indicators to different charts and see. I'm opening one more chart and I can add some other indicators. I have added these two. I don't know which indicators are they. I have added them and here I have other two. So this is also possible. Okay, so free version is also available. You can test in free version. The limit will be less. Will not be able to do complete testing like I did with deep back testing and all those things. But still you will be able to understand and you can analyze the trade by going to them. Here in strategy tester, there is list of trades and you can go to any trade. Suppose you want to check this entry level. You'll see this is below CPR. This is closing below Bollinger Band. There are 2 candles consolidating inside. Volume we will check. Then you will not be able to do bar replay on smaller time frame, but daily bar replay will be possible. Whether it is closing at lower half or not, lower 70%. All these things you'll be able to identify on this and you'll be able to learn. And then there is a exit. This trade is closed. What was my trailing stop loss criteria? When a candle closes above Bollinger Band, exit at that time. Here, this candle has not closed above Bollinger Band. This candle went up and closed above Bollinger Band. So that is the reason here I have exited. So this way you can analyze these trades. Right? We can use Dhan and trade directly. Yes, that is also possible. We can send orders to Dhan. We can send orders to Fires. If we go to trading panel, there is Dhan and Fires. Fires as well as Dhan. Both are visible here. Okay, any confusion? Naveen sir, any questions? Nishit sir, any questions? Sujit sir? I don't use this for trading purpose. This I have used for learning purpose to understand what happens to the trades and how to understand the moves. It is also possible to deploy this straight away. If I will show you how to use this straight away. There is this add alert and there is a message. So in this message, we have to insert entry strategy.action, strategy.order contracts, and there is specific JSON formats which we have to use that will create entry as well as exit. It depends on which intermediary services we are using. It will send this alert whenever there is a entry or exit. When we add alert, the alert message will go to our intermediary service. This message will create entry or exit. Position size will be calculated by system or we can enter manually. There are many things in that. You have to understand those things before going ahead. And it depends on which intermediary services you are going to use. And I have created one more tool. I will show that as well. I call this as set tool. So suppose this is a level. If I think that this is uptrend and price is likely to come back to this level, it will not fall below this. This will give me long entry here and my target will be at this. But I will not be available tomorrow. How can I trade? I will not be available on Monday. So I can use this set tool and I can create entry. This is setup start. When should it take entry? It should take entry on 12th of 6th of November. So 6th November, that is Monday. This will start after that. What should be the time? I want it should start only after 9:16. I don't want to take in for trading first candle. I want to take trading second candle. So at 9:16, this trade will be initiated. What do I want to do? I want to buy. If I want to sell, I will use sell. If I want to manage a trade which is already taken, I will select none. So I can manage even the trade which I have taken manually. If I buy, it will take a new buy position. Entry price 43,086. So suppose I want to buy at 43,090 rupees. Sorry. So 43,090 is my entry level and stop loss price is 42,948. So I will keep 945 as my stop loss. You can see this entry and stop loss both have appeared. There are two lines. If price comes to this level, it will take long entry. If there is gap down open below this, it will not take any. Now, this is stop loss price. Then there is hard stop also. If I use this hard stop, that means if candle crosses below that low, it will exit. This stop loss price means if candle closes below that low on the time frame of chart. This is 15-minute time frame. So if on 15-minute candle closes below that low, only then my stop is hit. Only then the trade will be exited. Means it will not initiate a trade if it comes down. But if I have taken entry and candle closes below this, it will exit. Then I can use calculate quantity and risk amount. Risk amount, suppose I want to risk 20,000 rupees. How much can I buy? I can buy 137 quantity. So I will calculate using 15 quantity. This is bank nifty. So for a lot of 15, I can trade 135 quantity. That means 9 lots. and stop price is entered. Now there are two things here. One is take profit one. Take profit one. Suppose I enter this and I enter 43,400 as my target. 43,400 is my target. It has created this line. I don't want to, I want to exit full quantity. I don't want to keep second profit level. Then quantity should not be mentioned. It will exit with full quantity. But if I enter any quantity here, suppose I want to exit with 75 quantity, it will show some error here because this level is not entered. Then I need to enter take profit 2 level, and take profit 2 level will be higher than this. So suppose I keep it 43,500. Then this error will disappear. It will show ready to go. And after that, I have this close of expiry. So if this stop loss is not hit and target is not done, but there is expiry, I want to exit before that, then I can enter this date. So this is, I want to enter exit on Friday. If I do not have stop loss and target before Friday, I will exit. So I have to select that and it will show red. The time I have to enter appropriate time. I can exit at 1 o'clock. Then after doing all these things, I have to confirm trade parameters. Unless I confirm trade parameters, it will not create a trade. And then I have these setups. So if I enter trade entry setup syntax, trade entry syntax, if I'm using dhan, I can copy their syntax of entry, paste it here. Then stop loss syntax will be pasted here. Same syntax will be pasted here for exit. This will be stop loss exit. This will be hard stop exit. This will be target 1 syntax for exit, target 2 syntax for exit, and square off. So if uh, I have to square off. Square off means on expiry. If trade does not go ahead and it remains in that range, on expiry date, it will exit with square off syntax. And whenever target is completed, all other alerts will not come. If stop is hit, then other alerts will not come. Hence, if I have entry and price closes below this, there will be stop loss. I will exit. Then even if price goes up, the entry will this trade will not trigger. If I have bought here and sold here, this sell will not happen. Only one trade will complete. If I buy here, it will sell, and after that, all signals will stop. This is very simple set tool which I have created, from where we can send orders to our broker terminal, and to create the alert we need paid version. Alert will be created from here, add alert function, and then we have to go to webhook, select appropriate webhook, and there we have to I think there is some new function in this now, two-factor authentication. So unless I confirm that, it will not send alert to webhooks. I'll check it what it is. It is recently introduced. So we can enter webhook URL and send the alerts. I have created multiple alerts and I will send you one. I have made one video. I'll share it. But alerts, I will show you how I get alerts. This is Bank Nifty, Nifty, Fin Nifty. I get alerts on 3-minute time frame, 5-minute time frame on this. But for actual trading purpose, for me, I use 15 minutes, 75 minutes. So these are 15-minute alerts. Same has 75-minute alerts. So I get these alerts, and all my mentorship group gets all these alerts in the Telegram. Ready-made alerts are created. Okay, any doubts? Nobody's asking anything. I'm just speaking and speaking. And no questions? Okay. Okay, then we'll end the session. Thank you all. Yes, it's all my own setup. I have one more tool which I have created. I will show it to you as well. Just 1 minute. So this is
Setup, Algo setup. This trade view only will do all the trade for you.
yes, from Algo, TradingView can take all the trades. Entry, exit, everything.
Hey, that's true. So now you have shown us everything in this trade view. So trade view will contact your broker, say Zerodha,
Yes.
or there is a, I mean, there is a no interface is required special. Direct trade view will join
For
between
that,
two.
only two brokers are applicable.
Okay.
In trading panel, we can see brokers which can directly send the orders. TradingView can send direct orders to these brokers, Fires as well as Dhar. It uses webhook URL and sends order to these brokers. But if we want to send orders to some other brokers like Zerodha, Alice Blue, or any other broker, then we need intermediary service. They charge somewhere around 1,000 rupees per month, and you can send orders using that intermediary service. So order from TradingView first will go to that intermediary service. From there, they will send it to your broker. You have to share your API keys with that broker. Means you have to enter, you have to open an account with intermediary, add your login credentials there, and from there it trades. Profit percentage once again. Okay. So I will show profit percentage for this. This is a strategy where there are 123 trades and I have added commission of 0.05%. So if I make this in amount, let us see how much is the amount for list of trades. If you see here, how much is the loss? It is 18,000 rupees. Let me take it. Calculate it. 18,618 rupees is the loss. If I remove commissions, make it 0. How much it will be? It shows more than 20,000. 16,000 minus 16,000. 620. So here, if I remove commissions, the difference comes to around 2,000 rupees for 3 lots. It includes brokerage and slippage. Actual brokerage for 3 lots, how much will it be? I'll show you. Entry is 44,220. Exit 44,590. Quantity is 45. Total tax and charges are around 440 rupees. I am calculating approximately 1,998. So I am calculating extra loss of 1,600, 1,500 rupees minimum. 1,500 rupees minimum loss I am calculating because of slippage. So if quantity is 45 and there is a slippage of 10 points on each side. So it will be 450 rupees on buy side, 450 rupees on sell side. It will be 900 rupees, right? Even means here I am calculating more than 10 points of slippage. Even after that, 10 points of slippage, and brokerage. It is showing profit of 0.05% is commission. Even after that, it is showing profit of 100% if we consider capital as 10 lakh rupees. On 10 lakh rupees, drawdown is 2 lakh rupees. So we will have 80% capital with maximum drawdown. So even after big losses, there will be 20% loss. And if we want to take a strategy, it is not possible to have loss more less than 20%. Most of the times, strategies will give drawdowns which are maybe more than 100% also. I have shown that too. So here I am considering capital of 10 lakhs. We should keep some margin money, additional margin money as well. So if we consider, suppose instead of 10 lakh, I'm comfortable with 20, just 10%. So capital should be 20 lakhs. So if I use 20 lakh capital, then this will come to around 50% return in 2.5 years. That will come to around probably 15% CAGR. And we are not deploying full capital every time. We can use this uh, capital for 2 or 3 trades over a period of 2.5 years. It is starting. It is starting from first trade is 8 June 2021. Now it is 2023 November. So 2 years, 6 months. In 2.5 years, we are getting 100% as per these calculations. If we consider capital of 10 lakh rupees. If we consider capital of 20 lakh rupees, if our risk taking capacity is less, then even in that case, it will be 50% profit and net profit will be over a period of 2.5 years, 50%. It will come to around 15% CAGR probably if we want to do compounding. And let me tell you frankly, I'm not using this strategy because I do my different type of trading. I do manual trading, which I like much more. I have shared some trades also in groups. It gives me better profits. That's why I'm not using this strategy. Strategies are good for those who cannot follow rules, who are not aware of the risk involved, or who are not able to control their emotions. And for that purpose, I have built this set tool as well as the Python tool, Python set tool, which I was going to show you. This is the tool. In this, I can trade. There are levels instrument and tradable instrument. So I can use level instrument. I can use tradable instrument. From levels instrument, there are multiple options. I can use from index, spot, index, future, index option, commodity, commodity futures, commodity options, stock, spot. I can analyze anything. If I have, suppose I have analyzed Bank Nifty and I want to take a trade on HDFC Bank, that is also possible. Here, level instrument will be Bank Nifty, tradable instrument will be HDFC futures. Even that way can be traded. So I'm making full video on this, how I'm going to use this set tool. It is not completely ready. It is making some errors even now. So it will be ready soon. It has almost taken more than 4 months now, and it will be finished soon. So developing these things takes a lot of time also. Okay, should we end the session now, or anyone has any questions? Have you learned anything from this session? Create a poll. Please answer this poll if possible, and we'll end it. We have 8 active people right now out of 21 they have voted, and all say that it was a useful session. Thank you very much. I'm obliged. So we'll end this session now. And if you have any questions, you can send it to me. Thank you all. Thank you. Bye bye. Enjoy India South Africa match. Share the result. Okay, Naveen sir. Bye bye.